I sold 7 stocks, 57 shares, just about $3,000 worth in my dividend portfolio in the last 2 months. There's a lot to talk about, and I want to give you a bit of a portfolio update, so you already know the drill. Let's get it.
Ooh, big bag. You not talking money, you can miss me with the chit chat. I'm not with the rah-rah or the riff.
What is up, you guys? Welcome back to my channel. Nikki here, and in today's video, it's a bit of a shocker. I honestly did not think I'd be selling this much. I really don't like to sell positions in this dividend portfolio, but it had to be done. But what I did, because I love every single one of you and I just value your time and appreciate your support, is I broke this bad boy up into 3 parts. First thing is I'm going to go over essentially everything that I sold, and then the second thing, I want to kind of compare some things. So about 6 months ago, I posted this video, which is absolutely bonkers to think, because I have been adding every single month, and some months a lot of money into this dividend portfolio, and unfortunately it's only about $1,000, maybe $2,000 more at this point after 6 months. And I know I have added more, but that's just the times that we're in, honestly. There's really nothing to do about it except for just continue to do what we're doing. So I do want to hop in there and kind of show you a comparison between the diversification of my stocks at that point to what they are now, which I think is going to be pretty interesting because it's very different. And then the third part of this video is I'm going to do the same thing, but I'm going to show you the sector that I am investing in. So in that video, it was a lot different than what it looks like right now, and I'm very excited for you to see it. All right, you guys, so I wrote it down on a nice little sticky note here. It's not even a sticky note. This is like not sticky. It's just a note. Oh god, I've had a long day at work today. Golly, I can tell you that. In July, I went ahead, and if you watched my stocks I bought video, you would already know this information, but I went ahead and I sold 7 shares of SPYG for a total of $371, and then I sold 7 shares of SPYV for a total of $259, which makes that all come out to about $630. And I did immediately put that straight into more stocks and more positions. It's not like sitting cash. I'm not taking it out to spend it because that's really stupid. Don't highly recommend that. Actually, don't lowly recommend it either. Not at all. But also, you guys, like, as I'm sitting here chatting with you, there are about 4 more positions in my portfolio I may end up selling. And here's like kind of how I feel about selling things, and I mentioned it before, so I'll keep it quick. If you A, do not invest in it consistently, move on. B, you can get more bang for your buck, aka get more dividend income, more passive income, more money, change it and put it into the other ones, okay? 3, if you don't really give a crap about the company, if you really don't care, if it's not something you're interested in, like if you actually enjoy what you're investing in, because it makes it so much more fun. For me, in these positions I sold, I realized like all of these things. So let's dive into August. Now, she was hefty. I sold 8 shares of Comcast, coming out to $304 total. 10 shares of Cisco, coming out to $453 total. 10 shares of Pfizer, which came out about $500 total. 10 shares of Citigroup, which came out to about $540 total. And then 5 shares of Discover Financial came out about $540. So all in all, it's about 2,337 big ones that I sold and put immediately back into markets, which you will see what I ended up buying. It's a big month, I can tell you that, in the stocks that I bought video, like I do at the end of every single month. So if you're not subscribed, you know the drill. Hit the subscribe button because you're not going to want to miss it. My dividend paycheck video for this month is going to be bonkers, okay? I'm telling you right now, you heard it here first. All right, so now part 2 of the video, I want to show you what this is looking like compared to basically my last portfolio update reveal kind of video. So I'm going to pop up some screenshots, kind of voice over this and explain to you what you are looking at. And it's honestly pretty cool to see. So you can see right here that these are the stocks that I held in my portfolio, or the majority of stocks. I don't think every single one was on here. It was just like, I think if you had over 1.5%, they showed it on this. But you can see here, this is kind of where I was diversified, and I was super heavy in Apple, coming in over 9%. AbbVie was like, I think the next one, yeah, like right after that at 4.4%, which it's pretty nuts actually. Then American Express was after that. Like, it's just, it's kind of crazy to see because it really was just Apple and AbbVie here. Not even AbbVie was still only 4.4, but Waste Management was 4.3. So it was pretty interesting that like they all were, there was a lot, but there wasn't a lot of the lot. What? Does that, are we Did you follow me there? There's a lot going on here, but there's really not a lot of stake, a lot of money, a lot of cash into any one position, which is good because you do want to be kind of diversified and spread out a little bit, but this is a little bit too much. Now I'm going to pop up on the screen for you what I got going on currently. So now you can see Apple's still, I mean, it's a little bit more, it's 9.4, but look at AbbVie. AbbVie is at 9.5%. And if you know, every single month this month, my goal was to pick up one more share. So I'm crushing that. And you'll see if you're subscribed and you see the video at the end of this month, absolutely crushing it. But you can see that I really kind of like have added to a decent amount of holdings. So like JEPI is coming in a lot heavier at 6.5 almost. I have SPYD coming in at almost 6%. I have Starbucks coming in at 6.5%. So you can see, like, just by looking at this, that there are a ton of stocks that I favor over a lot more. And that's why I still have about 4 in my brain that I might want to part ways with, because I don't add to them. If you're curious, this WBD over here was from the AT&T split. So that's Warner Brothers. It's kind of a POS, to be honest with you. I don't know what I'm going to do with it. I'm just sitting on it right now. And Peloton, I have taken such a fat L on Peloton. It's disgusting, but I might sell it. I might just hold it. I don't know. But outside of that, I want to go ahead and let's look at the sector now, because I think that is very, very interesting. All right, so let's check this out right here. This is what the sectors were looking like from my 6-month-old video of the $25,000 portfolio. So you can see here the telecommunication services are making up almost 16.5%, by far the largest holding. Then I had healthcare right after that at 14%, and then real estate coming in after that at about 12%, and then energy, and then right after that, investment trusts or mutual funds. And I highlight those because those are going to show the biggest difference. I was really heavy in telecom, which made sense at the time because I was really investing in AT&T because I wanted to pick up as many shares as I could before the split, and I still want to pick up as many as I can because it's like $18 or $17 now. But that does explain and give a little life as to why this looks the way it does. Now check this one out. I mean, I feel like a whole new bitch. You know that like TikTok vegan? She acting like I feel like a whole new bitch. I don't, maybe not. You're a bunch of guys mostly, so probably not. But if we look at this, do we see this investment trust or mutual funds coming up at 25%? Now, this is me picking up a ton of SPYD, but also getting a little bit more conservative with my portfolio in the times that we are in. I'm just gonna be honest. Then after that, we have healthcare at 14%, which makes sense because I'm picking up so much AbbVie, and you honestly can't go wrong with healthcare. Like it's just kind of very blue chip. After that, though, is real estate, which I absolutely love. And that's me picking up more things like Stag, more things like Home Street, more things like Invitation Homes. Love it. And this is a great market to do so because I feel as though the real estate industry will be suffering for a little bit in the near future. So I am going to be focusing on that. My telecommunication service is still pretty high, but relative to this, I mean, absolutely crazy. I'm so happy that this looks the way that it does now. So I know I was a little all over the place with this, but I really wanted to kind of just give you an update because it's been a while, and quite frankly, it's a little hard when it's been 6 months and you haven't seen your portfolio move. But looking at things like this helps you realize your portfolio is moving. You know what I mean? Like the dividends are going up, the position sizes are getting bigger, the strategy is more aligned. Like there is still growth without seeing growth, and I think it's important for us to remember that, not only as dividend investors, because that could just be overall pretty slow, but in times like we are right now. If you guys want to know some safe dividend stocks I think you should be scooping up right now, go ahead and watch this video right here. You guys already know, if you made it this far, I absolutely love you, and I will see you in my next video. Bye, guys.